strategy, and I haven't even looked at this, guy, so bear with me. I haven't even looked at um, the option chain at all. I just thought about it. I saw Rivian was at $16. My Robinhood, I have 1,600 free dollars open right now. So I thought I would just looked at another. I went to bar charts just to show you guys exactly what you could do. You can go to bar charts, and then you can look at it and see Rivian right there. I don't Rivian, and they had a 16 dollar calls at a strike price of $23 on the expiration of March 24th. So basically, guys, um, Rivian is at a price that I can deal with, and I really like Rivian, and I actually like to. Um, I'm into sustainability and environmental sustainability, so I can dig that. So let's go back to Rivian and let's just see what we're going to see. We're making monthly. Oh, sorry, we're making monthly income doing a wheel strategy, and that's just a trick to it. You got to think about cost basis. You got to think about what you lose. So, what do you do when you're dealing with a wheel strategy? The first thing you deal with is a cash secured put, meaning that you have money in the bank already and you're going to sell a put against that. So, we're going to open up the trade options in your broker account. In this particular one, I'm going to do with Robinhood. Maybe the next one I'll do with TD Ameritrade. But right now, this is Robinhood. Here's March 10th. Okay, so we know March 10th is just a week away. And I like week when some people say they like to do the month, but I like week because if the market just all of a sudden starts going, right now we're in a bear market in my opinion, and if the market just starts to finally make a breakout for the bottom, then your ass is gonna be paying hella much. And I'll show you like an example. The one caveat about the wheel strategy is that you've got to sell your option and get out of it before you get assigned. That's the trick bag. If you happen to get assigned, hopefully you get assigned at the lowest possible price. Because the reality is that when you're in the bear market and you're doing a wheel strategy, it's very easy to get caught with 100 shares of something that even though you shouldn't be only sharing, buying things or making contracts on things that you want to keep, but still, all in all, you can't keep doing the wheel strategy if it falls below a certain price and nobody wants to buy it really at that price. I mean, in other words, it's not valuable to you. You can't really do anything with it. In other words, you're stuck with the shares, and you're stuck with your money being stuck up into that. So, like right now, I got REM on another account, and $2,500 is stuck because REM fell to $23, and I paid $25 for it each share. And so now I can't sell against it. The only thing I could do is sell calls against it at $26 and just add. But how much do you think it's going to be really worth? Nothing. $10, $20. But it's fine. Anyway, just an example. Be careful. Okay. And the one way that people be careful about that is by looking at the delta, looking at the percentage of chance that you have for it for you to be able to get this to expire without you having to get assigned. So let's just say first thing we go to sell. Next thing that we do is go to put. Okay. So remember, you got to have the cash in there, and you should be only dealing with a stock that you actually like, or you wouldn't mind keeping. Those are big rules. Don't forget that. Okay, so the next thing is we're gonna look for what do we got here. You can see the chance of profit. These are all chances of profit. Okay, so now I like a 70% chance of profit or better. And 70% chance of profit, which means let's just give an example. This one is a 72% chance of profit, right? That means the delta should be about 39 or 38, and let's double check that to see. No, I didn't want to be put on the watch. Oh, I didn't know they'd do that. Anyway, delta, see, 33. So that's how you know delta is 34. Okay, so and so that delta is basically telling you that hey, you got your chance of this getting assigned to you is 33%, and it's 71% chance of profit, meaning 71% chance that you will not get assigned and you just get to keep that money. Okay, so just keep that in mind. That's what chance of profit is saying. That means you ain't gonna get assigned. 71% chance you won't get assigned. 33% chance that you will you will. Okay? So anyway, that's that. Now the question becomes, um, where do we want to sell it? I don't even know how to take this check mark off of here, removing it. Okay, there it is. Where do we want to sell that at? I want to sell that at now. I mean, say for instance, we see Rivian is $16 at the share price, right? You see it. You see it's $16, right? Okay, so that means we want to obviously sell a cash secured put against that at a lower price. So we go down and we look for the 75% chance or higher. So here it is at $27. These are our premiums. So now that's $66. That's $43. That's $27. That's $16. You know, as you can see, the chance is 64, 70. The higher your chance, the lower your money. That's because the market is saying if we know you got the bigger you're gonna have a big chance of winning, we're not gonna give you a whole bunch of money for it, because you're not taking that much risk. But the more risk you're willing to take, you know, then the more money we'll give you. You know, so you taking risk at 40% chance of risk, we'll give you $67 for that chance. Because right now 1651 and 1650. So basically, you about to get assigned. You might as well. I don't know why they saying you 40% chance of getting assigned, because I think you're higher than that. It's not even 50% chance unless the implied volatility is really low, which is a good way to look at that. You could say there it goes again. So implied volatility, there it is. And see, this is a 75% implied volatility. I would think that it's a much higher chance that would get assigned to you. Uh, and this is a 64% chance with a 74% high implied volatility. So I would think it's higher. But anyway, um, going back, how much money do we want to make today? What you gotta buy? You want to buy some Starbucks? You know, you want to fill up your tank with some gas? Okay, well, let's figure out. It takes you, you know, you need $60 to fill up your tank, but you know that if you spend that $60, you just might get assigned. If you take that $60, what we want to do is we want to keep filling up our tank, or at least keep getting half a tank for the next month or so. Well, actually, for the next, well, as long as we possibly can. But anyway, here we go. I'm gonna go with since it's gonna expire next week on the 10th, I'm going to go with the 76% chance of profit for $28. It's holding up $1,600 of my money for $30. Some people say, that ain't. It's up to you. You look at whatever you want to look at. I'm your yawning vlogger. This only happens as soon as I turn the mic on. So I'm gonna go with that $28. Okay, so let's get started. $28. I'm selling the put. You see, it's a short put. I'm selling the put. Here we go. let's see what we got. I think we should have enough money. Hold on, let me back up. Let me make sure I'm at right. Yeah, oh yeah. I could go higher, but I think it's just too much risk. So yeah, like I said, I'm going to short that. Um, you get $28. They say in a medium likely full. The maximum loss, meaning maximum, if the stock went all the way to zero, you're taking a chance of losing $1,500. Okay? I love Rivian trucks. I think that they're doing good. I hope that they'll keep doing good. And I think that they're going to be a future truck. But, so let's just see what's going on. In the meantime, and in between time, let's make some money. So you can see right here your Rivian chances. You know, look at that. And so it won't be until we'll be making profits unless it gets all the way down to $15.22. That's your break even. Okay, that's your break even. $15, and you can see it right here. Break even. $15.22. Okay, and then you can see it right here. $15.22. Okay, so anyway, we're gonna take this $28. Uh-oh, not enough buying power to place this order. That seems strange. So anyway, that's exactly how that would go if we were to do that. Um, if we were to do that, that's exactly how that would go. So, um, and then once we get those shares in our hands, I mean, well, look, once we get that contract, what we'll do is we'll either roll it and keep rolling it, or we'll go to we might get assigned. Let me see how much it said we have. Kind of strange. I'll work this out, guys, but in a minute. Oh, 14. Okay, I don't know why I thought it was 16. Oh, okay. So anyway, 14. I guess some stuff is still being held up. I got some SPY and stuff. But anyway, I could move some money over, or I could not. So yeah, guys. So what I do is I can move some money over from spending over to brokerage, and then put $200 in there. And actually, I don't even need $200. I just need, I think, $100, maybe 150, and then transfer that to my brokerage account. Transfer complete. Let's see. Okay, so now we'll go back to 1584. I think that's what we needed. Something like that. Okay. So at any rate, let's go to Rivian. Sorry about that, guys. Then we're gonna trade options. Let's do it one more time. It's okay, cause you guys get to see the process one more time for those. Then we'll go back down here. We said what? $27, 77% chance of profit. Short put, 1524. I think I got such a bad memory. I think that's what I had in there. Collateral. Filled. Boom. Okay, guys. So now I got Rivian. Short put order. Just got filled. Good to go. Boom. Okay. So now I'm under contract. You can see us. Cash collateral. Oh, this didn't used to be there. The way they had it written out. I don't remember that ever. Cash collateral. That's very good because that explains a lot of stuff for people. What I like about Robinhood is that they really want you to understand what you're doing. and they don't charge the 65 cents on the trade in, 65 cents on the trade out. That might not mean nothing to big institutions because 65 cents is nothing to a big institution when they're doing trades at hundreds of thousands of dollars. But for a regular trader person who might have $10,000, $20,000, you do that stuff enough times, and you're looking at that, hundreds and thousands of dollars on trades, on commissions, hundreds, if not a thousand, a couple $100 a year, and that cuts into a lot of profit margin. Anyway, so 1,500 held up. I got $27 today on that, and I mean, shit, to me it's a win-win, and I didn't have to do a whole bunch of different contracts. To me, I think it's better just to go with the highest contract with the highest implied volatility with a stock that you really want to deal with. You're really supposed to double check and make sure we ain't gonna be running into no earnings statement. That's another thing. I didn't look at that. I don't know what that is. Oh, um, so so that's another thing you should check out. Look at AMC. Bar chart is. I gotta become an affiliate with bar chart because I really love bar chart, man. It's not for them. They really can help you screen, do option screening, and help you find stuff. So anyway, um, that's Rivian. We in the building. We got Rivian, and after this, we'll just keep on. We'll keep on rolling. We'll keep on trucking. Pun intended. Okay, guys. So that's that. And then now, the next thing what we'll do is hopefully we don't get assigned, and we'll roll it to the next week, and roll it to the next week. And if you can imagine, you do this, that's $100 a month. Because you do this 4 times, that's $100 a month on $1,500. So shit, basically, you damn near double your money in a year. So, you know, I mean, you call it what you want to call it. I don't know, but shit, if I can make, you know, 50, if I can make $1,200 on $1,500 in a year, shit, that's damn near 100% gain. Come on, man. Make sense. Make it make sense to me, man. In a year, where can you put $1,000 in your bank account and then get $1,000 at the end of the year? It just won't happen, man. So, I mean, given this is not probably gonna keep rolling like this, but what it is that we can keep trying. So anyway, guys, that's that one. Let's see how much time we got on the clock. 18 minutes. I think I probably held you guys long enough. Um, this is Mr. Cosmic, the Cosmic Trading Academy, where we train, travel, and trade. And this is just another way we do our options trading. And just wanted to give you guys a bird's eye view of what it looks like. It's my 15.5 put. Right now it's $16.60. It still got a whole dollar to drop. It went down 37 cents, so I got a week. Hopefully it's at its low. You can see that. As you can see that right here. So anyway, alright. Wishing you guys all the best. Got any questions, comment below. If you need anybody to walk you through the steps, check out the description for any questions or anything like that. Hey man, like it, like if you like this kind of stuff, and we training, we traveling, and we trading. Come on, man. Shit, I'll holler at y'all later on.